you're here today to learn, to use, to learn about value investing, which is our topic today, and see how you can make the most of it. I'm Shruti Bopaya, and I head client engagement and communications. I also have with me today, and as always, Akshay Bhargava, our founder and chairman for Bridgewave. And I also have with me Sarthak Behura, who's our head of products. And this topic is, something that we had touched on earlier, but I think we're going to go in really deep this time round. Few ground rules. We have put you all on mute just through the session, but of course the chat is open, and we would love to see your questions. And as and when they come in, we've got the InvestorAi Academy team also here: Shailesh, Prabal, Siddharth, and a couple of people. And you will see a lot of people immediately trying to send you some responses for the ones that we think we can solve then and there. So please keep the chat buzzing, and welcome to all of you. And Akshay, over to you.
Thank you, Shruti. Like always, I'm really happy to see so many people here. I mean, it just reinforces my belief that there's a lot of interest in what we are talking about. And I hope you'll enjoy the session on value investing. Now, some of you may think that, look, we've done this value investing session before. Why are we doing it again? Well, first of all, we are doing it again because there are lots of people who haven't seen it. Secondly, as we talk about these things, we get a lot of questions. And frankly, all of you are telling us how to shape the webinars, what to talk about, what to spend time, more to spend time on, and what to sort of spend less time on. So today's session is about value investing. Let me just start with a couple of very quick questions. One is, Prabal is going to put up some questions. First one is about your investment experience. How many years of investment experience do people have? Okay, just click the answer, and then we can.
Yeah, we're seeing it up on the screen, Akshay. So we, yeah. Oh, you can see it too? Okay, great.
Sometimes I can't, but right now I can. Okay, so about 50% are.
It's a good number. Yeah.
And that's really interesting. That's very, very good. There is another question I'm going to ask you, and please you don't have to answer, but I would really like to know what age bracket you fall in. And you will see why in a couple of minutes when I go into my slides. It's useful to know. So Prabal, could you pop that question, please?
Yes, here it is.
Yeah.
This is so interesting to see this.
Very interesting. So what this is really saying is that 40% of the population, roughly 38-40%, is under 25. And if I go under 30, that number becomes 57. And if I go under 40, that number becomes almost 70% or 80%. So most of the people are, 40 or below. That's very, very interesting. Thank you, Prabal. You can remove the poll. Now, let me talk a little bit about value investing. And again, please put in your questions on the chat. I won't be able to see the chat at the moment, but towards the end, I will answer questions on it. So what is value investing? If you really look at it, it's basically investing in high quality stocks with strong fundamentals whose price has fallen. Now, this is not a new concept. This was invented by Mr. Benjamin Graham and his colleague in Columbia University in 1934. So this is a very old idea. And basically, Benjamin Graham said, you should buy companies that have steady profits, that trade at low prices, have a low PE ratio, and have relatively low debt. Now, this was his definition in 1934, but it hasn't changed that much. But before I actually go into value investing, let me just talk a little bit about one concept that is extremely important. And this is what I mean. Time is your friend. Okay. I don't know why I'm seeing these whiteboard lines on this, but I hope everybody's not seeing it. But it matters how old you are. It matters how much you invest. And it matters how much time you spend on a regular basis. Now, this may seem like a little bit of a truism that okay, how old you are and all. But let me explain. This is very, very, very important. So if I look at there is a superpower in value investing that all of us have, and that is compound interest or compounded returns. If you look at Albert Einstein, he said compound interest is the eighth wonder of the world and the most powerful thing I've ever encountered. This is a man who invented relativity. Okay, there's another guy called James Surowiecek. He said, I think people don't understand compound interest because typically no one ever explains it to them. So what I'm going to attempt to do is to first explain the power of compounding, and then we will go into value investing. So if I just go to the next slide, see, let's take a numeric example. And this is a very simple calculation, but a very, very powerful notion. If you understand this and nothing else in the webinar, I have succeeded. Okay, so it's not about necessarily finding stocks, but just get the strategy right. So if you are 30 years old, and we have seen 37% of people here, more than a third, are under 30 or no, 57% are 30 or below. And if you make a starting investment of 5 lakhs, okay, and you invest 1 lakh every year, okay, and you never take any money out, you keep reinvesting the returns, okay, the total amount of money you will invest is 35 lakhs in, let's say, 30 years. So if you invest 35 lakhs with a 5% return, when you're 50, it will be worth 46 lakhs. When you're 60, it will be worth 88 lakhs. When you're 70, it'll be worth 1.5 crores. And, so that's a 40-year continuous compounding effect. Now, if you keep the same 35 lakhs, so I'm not changing the amount, and you only change the return, and you say you get 10%, and, for those of you who are investing, 10% return per year in stock market is an anemic sort of a return. At 50, it'll be worth 90 lakhs. At 60, it'll be worth 2.5 crores. And at 70, it'll be worth 6.5 crores. And the same 35 lakhs at a 15% return, which is probably what Indian markets are closer to what they can deliver. When you're 50, which means 20 years from now, it'll be worth 1.8 crores, 60, 7.6, and then at 70, 31 crores. This is retirement money, guys. Okay. But the important thing is that you have to start investing early. And the earlier you start, the better it is. Okay, so that is one. That is why I meant time is your friend. The second thing is you have to be consistent. Okay, now we as Bridgeweave or InvestorAi, I can't help you with time. You are how old you are. Okay, if like me, you are 64, then you don't have as much time as if I was when I was 30. But all of you from this group, from what we have seen, do have time on your side. And like I said, we can't help you with time, but we can help you with consistency. Okay. So this is a hugely, hugely important notion. And if you invest early and you invest in a consistent and a systematic manner, so that you can generate consistent returns over the long term, there is no other financial investment that will be better for you. I mean, it's a bold statement, but that's completely true. So what do you need to do? You need to find good companies that are undervalued. You have to get comfortable with what their business is. So don't just invest blind because somebody told you. You have to check whether this undervaluation has happened before. And if all that satisfies you, you have to buy it and hold it. So 5 things you've got to do. Okay. It is very simple. And InvestorAi, the value investing algorithm, is designed to do exactly this without you having to do a ton of research yourself. Okay. So all you need to do is very deeply understand what this algo is doing, how it is working, how to interpret what it is showing you, how to relate it to your personal circumstances, and make a decision. Okay, and then track it regularly so that you are able to enter and exit at the right time. And we will help you. I mean, InvestorAi helps you. It will, of course, never take a decision for you. That is entirely up to you. So let us go into, so what will you see? And I'll give you some examples by actually going into the app once we are finished. So if I go to the next screen, you will see 3 screens in our value investing Algo. The first one has to do with, it will tell you the name and details of the company. So this company is Prestige Consumer Healthcare. It's a New York listed stock, trading under the symbol PBH. On 4th of March, which is the date of this screenshot, it was trading at $42.45. Okay, so it is now telling you that this is an undervalued company. So there are so the red square box, which is valuation, is the one that tells you about undervaluation. So what we do is we compute the relative valuation of any company compared to the market every day. So we do this for every company every day in the world. That itself is a massive calculation. We then rank the valuation on 0 to 100, and we say this is on the 4th percentile. So 20th percentile is a cutoff. Anything below that is undervalued. Anything above that is not undervalued. And you can see it on the bell curve on the chart. There's a dotted line called threshold. The threshold is the 20th percentile. Anything to the left of that threshold is undervalued. And the lower the number, the greater the undervaluation. So what this is telling me that this Prestige Consumer Health is trading at 4th percentile today. The insight was generated 2 days before, on the 2nd of March, when it was trading at $42. At that time, it was on the 3rd percentile. Okay, and the figure at the bottom, that chart, shows you how the relative valuation has moved in the last 1 year. So as you can see, it has really, really come down. So this tells me and gives me enough data to tell me that this is an undervalued company for sure. Okay, but is it a good company? If it's not a good company, then when ILFS was declining, it was undervalued for sure when the price was crashing. But it wasn't a good company, and you should not have bought it. So that's the next question to answer. And the next page, which is called sector rank, tells you about the undervaluation, about the quality of the company it is.
Sorry, Akshay, just 1 second. Guys, can you stop annotating on the screen, because we are recording this and there's a lot of lines and people are complaining on the chat. Please don't, I know, you put those lines. Yeah.
And if you can remove the lines that you've already created, that would be very, very helpful. Thank you.
Akshay, can you please stop sharing and reshare again?
Okay.
Akshay, you need to just do that. Then you disable the annotation from the audience side.
Sorry, apologies.
Yeah.
Much better.
Okay, so I thought I was the only one seeing it, but these are little wonders of Zoom. Anyway, so now we are on the second page, which talks about the sector rank. So now this company ranks 42nd in its sector, which is pharma. Now, 42nd is not a great rank. Quite frankly, I would question whether I want to sort of buy this company, but it's an indication. Now, we also decompose the rank. We tell you how it is constructed. So capital structure, which is the company's ability to service its obligations and debt, is at 30th percentile, which is low. So if it's in the low category, guys, that's not a bad thing. That's not a good thing. Analyst consensus view is kind of medium. So theek hai, zyada acha nahi. Valuation, it is scoring high, of course, because it is a cheap stock. But future outlook is 14, which is again low. So for me, this is not really an exciting find. So this tells you whether it's a good company. The third section, which tells you how quickly has the price bounced back in the past. So there is a theory in mathematics called mean reversion theory, which means that if a price of a stock drifts far from the mean, it will bounce back. It will tend to bounce back. And how quickly it bounces back will determine how much money you can make. Okay. So we then go back for the last 2 years and we analyze what this stock has done. Has it ever fallen below 20th percentile? So we are again calculating the ranking for every company every day for the last 2 years. So, behind this simple screen, there is a gigantic amount of computation that is going on just to make life easy for you. So in 2 years, this is telling me that it has fallen below 20th percentile 4 times. And if you had bought every time, in 3 months, you would have made 7.1%. And below that is a chart that shows you how it moved each time. Now, 7.1% might say, it's okay. But remember, it is 3 months. So if you annualize that, this is 28, 29%. So it's quite a handsome return, but it's not such a great company. Okay. So this is a very, very important notion. And this is how you should interpret and read the screens that you see in InvestorAi. So one last thing I want to talk about, after which I will go into the app and look at some current insights and see how to interpret them. You need to know that you can trust InvestorAi, and the numbers you're reading are correct. So in order to do that, if you go to the top of a page in value investing, you'll see the title and then you'll see the bell icon. And between the bell and the title, there is a target button. If you press that, it will show you how accurate this algo is. And on that date, it was running at 85% accuracy. It had generated 226 insights at an average return, 3-month return of 19.8%. Okay. If I look at the numbers today, which we have yesterday we have calculated, the value investing algo for India has generated 11.8% return in the last 90 days, which is 2.65% over benchmark. So all value investing ideas in India generated 11.8. The benchmark, which was Nifty, is 9.15%. And that is 10+% annualized outperformance. But more importantly, it is 47% annualized performance. And remember, we were talking about 10-15%. Now, of course, you will not get 47% all the time. If you're very lucky. But as long as you get 10-15%, you're doing very, very well. You just have to get it every single year. Okay. So with that, I'm going to stop sharing this screen and I'm going to share another screen with you. And that is going to be my app. I'm going to pull it up on my phone and then I'm going to share it with you.
When you're on that, Akshay, just also get to the relative value graph. Somebody wanted you to just explain that when we come on our screen. Yeah.
So let me go into InvestorAi. So you will always start with the home screen. By the way, there's a new home screen coming that is much easier to follow and much. So on top you'll see wisdom of crowds, etc. Then you'll see some then your active monitoring area. Before you start, it is very important that you click on the top right-hand corner, which will take you to the menu. You click on preferences and you must check what markets and sectors you have activated, because if you haven't activated something, you'll never see it. So let us go to markets. I've got India, UK, and US. Let me switch off UK and US. And as you can see, it's really, really easy. Now let us look at sectors. And I've got retail, services, and technology. So take care. We will just leave it like that. I'm only looking in India, retail, services, and technology. So for instance, take energy. If I've not activated energy, I would never see any insights on energy. So let's say done. Now let me go to the ideas corner. Now here is value investing, which is on the top left. If I go on value investing, it gives you a brief explanation as to what it is. And if you've read it, it's the same thing every time. You can say, okay, don't show me again, and you can get rid of it. So now it's got only 2 insights for me at the moment because I selected only 3 sectors. So let me increase my sector selection because I want to see more. So I'll switch on auto, I'll switch on banks, I will switch on non-banks, I will switch on pharma, and let's go for leisure also. Okay, so I've done more sectors. Now let's see what happens. If I go back to ideas, go to value investing, and all of a sudden, there are 8 insights today. Okay, I can sort them in any way. I can sort them by gainers, I can sort them by returns, or I can show me all but sort them by returns. So I can see that. So HCL Technologies is an old insight. There's a bank, I don't know who LICH is, let's see. This is LIC Housing Finance, of course. How could I forget? So let's unpack this particular one. Okay. So LIC Housing Finance currently, which is on the 1st of April, trading at 432 rupees on the NSE. Current valuation 9th percentile, sector rank 50th rank, and backtesting 16%. Wow, that is fantastic. By the way, you will see a question mark from play time to time. Whenever you press it, it will explain to you what this page is showing you. Okay, so these are contextual explanations that are available to you at any time. It says insight returns are 3.8%. Now, the date when the insight was generated was 17th of March, when LIC Housing Finance was trading at 417 rupees. And at that time, it was on the 3rd percentile. It has since then moved to 9th percentile because it's trading at 432 rupees and has generated 3.8%. Now, value investing is a 90-day signal, and we will keep this open for 90 days. So, and you will see the valuation moving because it changes every day, because we recalculate it every day. So it'll show you the original valuation at which the insight was triggered. It will show you the current valuation. And if the current valuation crosses the 20th percentile, then according to the algo, this company is no longer undervalued. So while you may still see the insight, you're only seeing it because it came up several days ago. And that would not be a good time to buy. Somebody wanted to understand the relative valuation chart. So this is again the same concept. So today it's trading at the 9th percentile. And we have calculated this every day for the last 1 year for LIC Housing Finance. And it is now showing you how this relative valuation against the market has moved. Why is relative valuation more important than absolute valuation? Because absolute valuation can change. So tomorrow there is a stock split. The price will become 2:1. Then the price will halve. But nothing has actually changed. The valuation has not changed for the company. But the price has dropped. So if you just look at price, that can be a little misleading in certain circumstances. That's why we always look for relative valuation. That compared to the market, is it a cheap stock or is it not? So that's the first one. Now again, you see the target button on the top. If you click on that, it will show you that this algo is now running at 91% accuracy, the left-hand column. It has generated 163 insights globally, not just India, and an average return of 20.8%. And in the non-bank sector, it is running at 100%. That is pretty incredible. But that's just how the returns have panned out. In a bull market, you will tend to see these kind of numbers. This particular insight we know has generated 3.8%, and it's been 16 days since it has been generated. So you could have theoretically bought this on the day it was generated, which was 17th of March. You could have sold it on the 1st of April. You would have made 3.8% in 15 days, and you could start again. Okay, so what this algo does is show you the point of entry and tell you this is undervalued, go now. Then it keeps tracking the signal, and when the signal crosses a certain threshold, you might want to say, okay, now it's, certainly it's not a time to buy, but maybe it's a good time to sell. And that's again up to you. You may decide to book your profits. You may just decide to sell enough to cover your cost and let the rest of it ride. Or you might decide, say, no, I really like LIC Housing Finance. It's got long-term future, big company, big sort of book of housing loans. I just want to keep it for the longer term. So, then you just hold on to it. So let's go to sector rank, which is, so it's 50th percentile, kind of middle of the road. Capital structure, very, very poor. 8th percentile, meaning, paisa nahi hai. But this is LIC Housing Finance, guys. This is 100% owned by the government. This is like government company not having equity. It will always be supported by the government. So you could take the view that 8th percentile is too low. I don't want to touch this company. You could take a view that 8th percentile in this case does not matter because it's a government-owned company. That's why I think, that I said earlier, you have to understand the company and be comfortable with the company's business. Otherwise, don't get it. If you don't understand, don't touch it, no matter how cool it looks, because you will always make a mistake. The analyst consensus view is 53rd percentile, which is kind of okay. The valuation is really cheap, and the future outlook is okay. So, in summary, this is a reasonably good stock with poor financial, with a poor balance sheet, but full government support, trading at a very cheap price. Okay, now this is where we, InvestorAi, stop. We do not tell you it is good for you, you should buy it. We do not tell you it is not good for you, don't buy it. It is your decision. We will never take away the decision from you. You have to decide. And how you decide, what you do, then makes all the difference. What I would encourage everyone is to try. Okay, invest a little bit of money. You will learn by trying a little bit, and you'll get more comfortable with the concept. You'll get more comfortable with interpreting this data. You will get more comfortable in understanding how it works for you, because it must work for you. It doesn't matter if I made money or Shruti made money or Sarthak made money. You must make money, and you must be comfortable how you did it. If you do ever in life do not understand how you made money, don't do it again. Okay, because then you made money by luck, and you cannot count on luck all the time. Okay, let's go to back testing, and here it is telling me that it has happened 4 times in the last 2 years, and the returns, it has bounced back quickly. So this tends to fall, but LIC Housing Finance, but tends to bounce back very fast. And if you held it for 3 months every single time, you made an average of 16%, which is again a very, very handsome return for a company that is it has a weak balance sheet but has government support and is generally doing all right. Okay, that's really how I would interpret that. There are some further buttons at the bottom which I want to show you. There is something called monitor. If you think that, yeah, it's a good idea, I want to monitor it. So InvestorAi, please keep track of this for me and alert me how things are going. I don't necessarily want to buy it now, but I want to put it on my watch list. So you monitor, you have to click. Then there is something called live info. If you say, okay, I need to learn more about LIC Housing Finance, so you have to go to Google, and this takes you to Google Finance. And immediately you are in Google Finance. You can read about HDFC Bank, Diwan Housing Finance, their competitors. You can look at LIC analytics. You can read news. You can see their financials. So there's a ton of research that you can do quite easily. You're still in the app, so just press back, and it will bring you back to the screens that we are familiar with. If you really don't like this insight, you can delete it so you never see it again. Or if you want, you can always share it. Okay, and you can share it in any manner you like, on WhatsApp, on LinkedIn, on email, on text, and so on and so forth. So that's value investing. I will come out of this. It is, now if you press the target button here, now you're not on any single insight, but you'd see the accuracy for the entire algo, just the algo. So, and again, if you, similar one, let me just take HCL Technologies. Again, now we understand how this works. This is an old insight generated on 25th of January, currently trading at 42nd percentile. So HCL is not worth buying anymore. It's, you know, when the signal was generated, it was 947 rupees. It was on the 3rd percentile. It has now gone to 42nd percentile. So, you know, this is, if you had bought it, this is a good time to exit. You will make your 6%, 5-6%, and that's a good return. And again, this is how the relative valuation has moved. Okay, so I hope this gives you a good idea. I'm going to pause. I'm going to stop here and go back to the thing. And now let's see. I'd love to answer any questions and
There are.
take it from there.
Great. Thanks, Akshay. There are quite a few questions, which have come in. Some which got answered while while you were speaking. But Sriram, I hope, the graph question you asked us that got answered. In fact, we've got a few comments today that have come in as well. Akshay, some, feedback on what they would like, which I'll get to in a bit. But let's answer this one first from Heplin. Asks, how can we get higher returns with low risk in a short time?
How can I become more happy using fair and lovely, right? No. So look, returns are a question of discipline and consistency. Okay, in InvestorAi, you will see a ton of information. If you're really after the short term, then you should be looking at Alpha 330. Okay, that is a 30-day algo. The algo targets a 3% return in 30 days. And that is also running at some 80-90% accuracy at the moment. It's a very accurate algo, which we have tuned very, very carefully over 2 years. So it's an AI that has learned for 2.5 years. So it's quite a smart algo. I know I sound like a proud father, but it is a good algo. The other short-term algo that you should look at is swing trades. Swing trades is a 3-day algo. It gives you ideas for 3 days. So these are signals that we can give you. What we can't do is decide for you. We cannot tell you with 100% guarantee, ye to upar jayega. Okay? There your judgment comes in. There your experience comes in. And that is why whatever we tell you, whatever signals you get, it is no substitute for your own knowledge, experience, and judgment. Okay, so it is possible to generate high returns in a short period of time with a certain level of risk, equity risk as well. And remember, these are signals on individual stocks. So there is no diversification unless you invest in several of them. So you have to create your own diversification. But you will make money if you follow the logic with a certain investment discipline.
It's your style, basically.
Akshay, yeah. So in continuation to that, actually, Sushant is asking exactly that. I think he's saying just buying undervalued stocks will not always give returns. So what are the other characteristics of a potential undervalued stock which can give good returns?
Akshay, before you answer, sorry, people in the audience, please do not click on the chat link. This is not endorsed by InvestorAi. This is a spammer. So please refrain from clicking on that link. Sorry, Akshay.
Thanks, Arthur.
No, sorry, what was Sushant's question? Just buying undervalued stocks will not always give returns. Yeah. So Sushant, you have to think, what is your time frame? Now, there is a philosophy about value investing, is that this is really a long-term play. I mean, if you look at Warren Buffett and Coca-Cola, kitna 50 saal se, he's been holding it. So, so there is another view on, if you like a company and, then you have to hold it for a very long time. So returns will come. If you have bought a company that is fundamentally good, and you bought it at a time when it was undervalued, it will give you returns over the longer term. Now, is longer term your focus? That is really where you have to introspect and know your own style. A lot of young people today want short-term returns. If I made money in 30 days, they get disappointed. But I think you have to have two parts to your portfolio. One is a short-term portfolio. The other is a longer-term portfolio. There is somebody I saw on television. I think it was this guy Chamat Palahpatia, who is extremely famous now because he bought Virgin Galactic and so on. He said, somebody asked him, do you like Tesla? He said, I love Tesla. It's a great company, great management. Elon Musk is a fantastic guy, etc. And he says, how long would you hold Tesla? He said, forever. He said, buy Tesla at a good price. And I think this Tesla is going to go places. My hold period is forever. Now, it's quite an outlier statement. But I'm just sharing this with you to give you an idea how people think about these things.
Great. So we have one from Rahul Akshay Sarthak. This one is on regulatory frameworks. So Rahul wants to know that how does the regulatory frameworks like the SEBI rules look at algo-based investments or trading? What's the current regulatory position?
I don't think SEBI has a position. I'm not the expert here, please. But Rahul, I don't think SEBI has a position on algo-based trading. And I think when I see the term algo-based trading, for me, it is a fund or it is a pool of capital that is invested automatically by algos with no human intervention. That is the vision that I'm not, proposing at all. I'm saying that InvestorAi is a bunch of algos that will not make the investment for you, but will make you more intelligent about your own investments. The person making the investment is not algo, it is you. So I think if you take that perspective from a SEBI standpoint, there is no difference between any other signal that you see in Economic Times or any other investing blog or money control or InvestorAi. We are just explaining to you how the signal is generated and how to understand it. उसके बाद क्या करना है वो आपके ऊपर है. We don't control that at all.
A continuation to that is a comment Vishal made on the chat while you were speaking, Akshay. So this was around, is it possible for us to have a user manual with examples? So I think, and then you went into the question marks and how they could understand, more about our app. But if you want to talk about that. So
look, when I grew up, all software used to come with user manuals. I think those days are gone. Unfortunately, these days, nobody has user manuals. If I take my own iPhone, there is so much functionality that I don't know. I've been an iPhone user ever since it came out, 15 years, 20 years ago. But I still don't know whether I know all the functionality, and you have to some extent discover it. And there is a lot in InvestorAi, and to some extent I agree with your point that can we, Bridgeweave, help you understand what is inside the machine. And that is why we do all these webinars. That is why we have now added a whole host of videos inside the app. That is why we have the knowledge center in the app. That is why we have the glossary in the app. And but there is no substitute to using and learning. What I would suggest is, and this is not just for you, but for everybody, please use the app. Wherever you have a question, write to us. support@bridgeweave.com. That is the email. Just write to us. We will be delighted to hear from you and tell you more about how to use it or how to solve a particular problem. Philosophically, we will never give advice. So if you're looking for us to tell you, please do this, please do that, that will never happen by intent, because we are not an advisor. We are simply a information source. I think the best information source in the world, but that's what we are. So in terms of how to use the app, we will help you as much as we can. In terms of telling you what to do, sorry guys, won't do.
Great. On that note, this one, I want to direct to you. Tanya, Dhanush, and Abhiram have a question around specific stocks and why some are not available to monitor, and how does that work? But Abhiram specifically, wanted to know why should we only check valuation of stocks, where we give insights? Can't we, just check valuation for any stock? So that's sending that your way.
Honestly, very good question. Let me answer the first bit. So you can search for any company in the world. I mean, if it's in Europe, US, UK, and India, and Play. But the thing is, Play also takes in forecasts, etc., from analysts. So what happens is when a company is very small, let's say less than 200, 300 million, the coverage, the analyst coverage is not there or not prevalent, or doesn't get updated too soon. So what we do is we create a market cap filter, which is close to around 300 and 400 million for India. And whenever we have all the estimates available, we make it a part of our universe. But having said that, Zopo, also you had the same question. We are revising the universe every month. So hopefully the stocks you're looking for might be incorporated in this new release. The second question, in terms of value investing, like why shouldn't we just buy, that's a very good question, that, just not buy undervalued question. The value investing algo that we have doesn't just look at undervaluation, but also looks at mean reversion. So that's where, Akshay was explaining the back testing and all of that, and also the multi-factor ranks and so on. So it's not just an undervaluation, but it's also the ability of the company to revert back to its normal trading levels, right? And that is done through sophisticated AI algorithms that generally look at the ability or the probability of them bouncing back. Actually, you want to add anything?
I see a question from Narayan. How can we build a portfolio by using value investing? So Narayan, first thing you got to do is to a bit self-serving, but I will tell you, first thing you've got to be a subscriber, because if you're not paying for your subscription, you will only see one sample insight. So we'll show you a high quality insight, but you'll only get one a day. Now you might say one a day is enough, but and it may be, but I would encourage you to subscribe, because then you will see all the insights available in the system. Secondly, if you're only investing in India, then you have to select which sectors are of interest to you. So there is some prejudgment required. For instance, in my case, there are some sectors I just don't invest in because I don't understand them. I'm not comfortable with those sectors. On the other hand, I'm very comfortable with things like technology, banking, services, non-banking financial services, etc., because of my background. And I tend to like those stocks because I can understand what is going on in those companies. So you have to understand what is your sweet spot in terms of knowledge, experience, and interests. Switch on those sectors. Then you will see a whole bunch of insights. And as you look at them, the more you look at them, the more practiced you will get. Ye theek lag raha hai, ye theek nahi lag raha, there's something not right. I now look at some algos and think something is not right here. And then I go down and I do some more research, etc. So you have to spend that 20-30 minutes every day. It is a question of consistency. I go back to the slide that I said earlier. It is a question of being consistent and taking that time and being disciplined. So if you do that, I think you can build a kick-ass portfolio in value investing.
Great. There's one question here. Gautam asks, does the calls that we take, does your call consider costs like brokerage and taxes, etc.?
No, it doesn't. It's a pure price-to-price call. Brokerage costs, you could be going to Zerodha, you could be going to ICICI, we don't know that. And your tax situation is your tax situation. So that's up to you. By the way, one thing I want to add here. The value investing algo will show you the insights the machine is generating. You could say that, I like Marico very much. I really know the company. I used to work there or whatever, very familiar with the company. If you can go to active monitoring and you can start to monitor Marico. There may be no insight at the moment, but whenever an insight comes up in any algo in the system, it will alert you. Okay, so So if you think of value investing, the machine is telling you what to do. With active monitoring, you can tell the machine when to alert you. Okay, so it becomes a slightly interactive relationship between man and machine. That's how we have kind of designed it.
Actually, there's one specific one that Narayan has actually just asked us about subscription, and I want to take it right now. So he says, can I have a net banking payment option to subscribe? So Akshay, do you want to take that? I can also recap at the end. So
you are 100% right. We are in the process of integrating with Razorpay, and we'll have all the options, including UPI, available. I'm sorry it's not there at the moment. It is taking a little bit longer for us to integrate with Razorpay than we had anticipated, but it's coming any day. And if you leave your email or contact details, we will contact you and tell you the day it happens. We are as keen as you are to make this available. So it's coming really soon.
Narayan, we will definitely tell you, like Akshay said. So we've made a note. You will get that email from us. We are hitting, 116 at the moment, and we can move. Yeah, no, I'm just going to get to one more question, Sarthak, unless you've seen something else. But I see one that Pankaj has asked, and it's more like a recap. How do we generate ideas for long-term investments, maybe 5 or 10 years, for example? That's what he wants to know.
Yeah. So actually, do you want to take that, or may I?
No, why don't you start? I will add my thinking.
See, it's a very interesting question, Pankaj, because, it used to be the trend, in the past when economic cycles used to last a long time. But with economic cycles becoming shorter, what happens is you would have seen this yourself, suddenly in the market, all banking go up, then it is, FMCG, during the defensive periods, etc. Timing the market, or not timing, but essentially selection or sector selection has become a very, very pivotal thing. And if you're still looking to actually create a longer term portfolio, I would encourage you to check out our fundamental section, where you can look at companies with best, balance sheets, best profitability, etc. If you are looking for a longer term bet, these companies would give you the cushion.
Yeah, I would say the same, Pankaj. It's a very good question and a very thoughtful question also. But I don't know what I would buy for 10 years, 5 years. This year, Tesla, 10 saal pehle kisko malum tha? It was an unknown little stock. DoorDash, Airbnb, all the big names of today were unknown 10 years ago. So I think the world is much more volatile. The economic cycles are much shorter. The time frame for everything has compressed a little bit. Now, I'm not saying it's a good thing or a bad thing, but it is what it is. So but it does not invalidate the first principles of value investing. Be consistent, generate a steady return year after year, and the compounding of that will take care of your financial needs. So I know it's not a perfect answer to your question, but I would encourage you to think a little shorter term than 5 to 10 years, and be consistent, because those days of buying Grasim or Tisco and not, I remember my father had shares of Tisco and they were paper shares, so beautifully engraved and, almost works of art that you could put on the wall. And then he just put it in his cupboard and forgot about it. Only when he passed away, we realized he had those shares, and which did well, So those days are gone. These days, there is much more activity happening in the market. By the way, we are going to ask you one last question, which is about a rating for this webinar. Your rating is very important to us because it gives us feedback. But what is even more important is if you can give us ideas of how to improve it. The ideas you can't put in the questionnaire, you can just put on the chat. So any suggestions on how we could make it more effective for you would be enormously welcome.
Yes, please put that on the chat as we, get this rating question that's gone up, which is looking very good. Yeah, thank you. Thank you so much. I would definitely want to get today's webinar code up as well as soon as we finish this, and please keep, give us your responses on chat. I see Manikandan, he's, started giving us feedback. So thank you.
Make us better. It is up to you and it is for you. And all I can promise you that we will take this very seriously. All feedback you give us is very gratefully received, and we do spend time talking about it and figuring out how to do it better.
So Sam, yes, we will be sharing the recording. So I will just tell you how you can register with us on the app, and then you will definitely get the recording. And even if you don't, but we'd love for you to register, but even if you don't, you can actually catch this on YouTube on the InvestorAi channel. So can I have the slides up, team? I just want to share the offer that all of you attending our webinar actually have with us. You have a special discount offer, and we would love for you to, make the most of it. Here are the numbers on the slide. We have 2 different plans for you. If you're extremely focused on the Indian market, but want all of the algos that, we spoke about. Of course, today we spoke about value investing, but during the Q&A round, Akshay actually spoke a little bit about, 3% return in 30 days. We have one which is called Alpha 330. So like that, then that for you is the domestic pro plan and only for India. There is an offer on the annual package, and the numbers are here up on your screen. Similarly, for the global pro package, plan, which is, you get more than 25 countries that you can actually look at. Of course, US, UK, some of the European markets, and APAC is probably what you might want to start with and look at. We have all of that for you. And again, the annual plan has an offer for you. Can I have the next slide? I'm going to just tell you how you can go about getting that offer that we have for you. We have 2 types of people here today. Some of you are already registered on our app. You've been seeing some of our, communication mailers coming to you on accuracy, on, things that went very well, over the last year. A lot of you wrote into us as well. For all of you who are already registered on InvestorAi, it's very simple for you. Please go on to your app. You can click on menu, you will see subscriptions, and you put in your code and that's it. You can subscribe with this great offer that we have. This is the code that's showing up here on your screen, WBNR, which is webinar short form, but 06. This is our 6th webinar in a row, so that's how we've got this code going. So please go ahead. And for all of you who have just joined us in today, you're very new. You just come in for the webinars and you've been coming, week after week, and we see a lot of you. It is time to subscribe, and we'd love to show you what all we have, in store for you in those plans. Visit our website, which is InvestorAi.co.uk, and you will land on a page where you can put in this code, you register, and you install the app, and boom, you're going to be loving what you see, and using all of those tips that you got today to make a lot of money. So please get there, and we're waiting to see you on our app and subscribing to all of these insights that Sarthak and his team have been putting out for you. So can I have the last, and we've just done the question, but I hope the chat is buzzing with all your feedback. Please write into us, support@bridgeweave.com, for any questions that you may have. We always respond. We always, pick up the phone, speak to you, and, make it extremely easy with any questions that you have with our experts, or if it's just technical questions that you may have. So waiting to hear from you all. Thank you very much. Follow us on all our social channels, where all the details are up here for you at the bottom of the screen over here. And till next week, have a great Saturday. It's a long weekend. We hope you enjoy, and see you soon. Thank you so much from the InvestorAi team.